Hi, welcome to Module 3. In this video, I will explain the 3 stages of investing decisions over investor life cycle and some examples of age-appropriate investments. Firstly, we will explain on the characteristic of youth stage. The age group of youth stage will be around 20s and 30s. Under this age group, they will attempt to accumulate assets in order to achieve immediate needs or long-term goals. Therefore, they are attracted to growth-oriented investment. In addition, growth-oriented investment has higher potential growth if investor decides to choose this type of investment. However, the downside of growth-oriented investment is that the higher the potential growth is, the higher the potential risk is. This, however, does not stop investor from investing on it. Under youth stage, they normally will stress capital gains over current income because they still have a long time to retirement, thus are able to invest on a very long-term basis. Some examples of age-appropriate investments for youth stage are common stocks, options or futures. Secondly, we will explain on the characteristic of the middle-aged consolidation stage. The age group of middle-aged consolidation stage is ranging from 30s to 60. Under this age group, they should be into their career and are starting to pay off the majority of their long-term debts such as mortgage and other associated debts. They will also tend to be focused on their family demands, as more of them that fall in this age group should already have a family of their own, or to take care of their parents. Their responsibilities also become important because they will have to think of their child's education expenses, which could be a lump sum for long-term. For a further look, they should also be planning to get their retirement savings. Due to all these reasons, investors in this age group will move towards medium-risk investments in order to preserve capital for their retirement. In addition, their earnings should exceed their debts so that they would be able to have more savings for other purposes. They will no longer willing to accept a high level of risk for investment. Therefore, from high-risk investment, they will transit to higher-quality securities with lower risk. Some examples of age-appropriate investments for middle-aged consolidation stage are low-risk growth and income stocks, preferred stocks, convertible stocks, high-grade bonds, and other higher-quality securities. Lastly, we will explain on the characteristic of the retirement stage. The age group of retirement stage will be from the age of 60 or above. After they reach this age group, they can be considered at the peak to their net worth and usually had accumulated all their lifetime earnings. Furthermore, preservation of capital becomes their primary goal. By this age group, their assets and income should have more than to cover any expenses such as bills and necessities. They will no longer willing to invest in any medium to high-risk investments because they had enough equity capital to sustain their expenses. Therefore, they will move towards from getting a highly conservative investment portfolio. In addition, current income is very important to them as it is needed to supplement for their retirement income. Some examples of age-appropriate investments for retirement stage are low-risk income stocks, mutual funds, government bonds, quality corporate bonds, and bank certificates of deposit.